One thing that bothers me about it is any one of the spikes that we have on top of this level, on top of this level, or on top of this level, we could see it produced on the bottom side. We could see that one, or this one, or this one. When we started this channel, it was about making everything even out of one side and the other. This level, you want to know what's funny? Is all of those triangles that go beneath this point, they all come back to it from the bottom as well. So I'm like, anything that anybody's excited about down here is technically part of sideways up then down. It could be a bullish pattern, a bullish pattern, a bullish pattern, a bullish pattern, a bullish pattern. But sideways up then down always brings us a downtrend. And sometimes they look like this. Sometimes they look like this. Sometimes they look like this. But every single time it makes the pop out of the top, you can always put a trend line on the top. Always put a trend line on the top. Now we get more time with the more energy we exert. And it could be sensible enough to make things as even as they were on the top, on the bottom, as we've seen many times today. But does it mean it's actually bearish? No, it doesn't actually mean it's bearish. It means that we can make that movement and have reason to reverse back to the middle to give these people more grief. But all of those trends that have broken prior have served a purpose of getting back to the worst place to trade from. The 261 and 127 are having a chance to work. We also have to consider all of these B points that are now in here. They're very far away given the risk reward that has to be taken on the 261, almost 100 points back to the farthest B point. But there is a B point that's right on top of an old 61. Now remember, this movement right here, sideways up and down, we do have to watch out for that. Because did you know that this 61 that we used all day, right? We used it, used it, used it, used it, used it, used it. We just went to the 127 of that 61. This is the 61. It's just about 100 points to get back to the 61. Again, I want to mention anybody that's ever taken any long trades can make sure that it's made safe. Now off of this 61, it could cause another one, but a bigger one perhaps. But like I mentioned, a bigger one, like the entire 61. I like that. 61 got the giant arrow. When the report released, and this is how precise and particular I literally mentioned it would be. The 127 of the 61 we were using all day. Check fibs. The zone can be a ticket back to the broken 61 above. 100-point move to get back to the 61 where Powell talk began. Risk of the trading during the report is high. Any short trades should be managed for a profit here. That's the reality of it. And I know this. This is what it's worth to spend all of that time getting to this understanding. Second to finding the worst place to trade from. Finding the biggest danger of the day to the best target of the day on the biggest move of the day. Prior to the dump, I was explaining that we could get a dump of any size, regardless of the size it returns back, regardless of the size it breaks the trend.